So you cannot trade no matter what based on news and based on very short-lived charts. You don't need 7 screens, real-time feeds, very costly or whatever, because there is some buying, some selling, the price moving, whatever. And then
I'm actually liking it. Your
Okay.
hand, it's going like magic.
you are going after the information that may be right or wrong about an event that is, of course, old, because you should be positioned way before that initial burst. You don't need technical indications, fancy techniques or tools or tips or advice or advantages to do that. You don't need anything. You just need number one thing to achieve with every trade is to gain confidence in yourself.
Welcome to Hive Presents Coffee with Crypto Season 2. Today's episode is gonna be in English language because the person who is coming to join us on the podcast is a trader. He is the founder of Material Bitcoin and he has trained more than 8,000 people to trade cryptos, commodities, stocks, forex and so much more. His insights are gonna be so valuable if you are a beginner. Even if you are an experienced trader, just make sure to watch this podcast to the complete end because this journey is going to be exciting for you. Ladies and gentlemen, let me welcome Mr. Uxio. Hello Uxio, welcome to Coffee with Crypto Season 2.
Hello Ariane.
How are you?
I can't be better.
Okay. Just a full disclosure, Material Bitcoin was a sponsor in our first season. But the reason Uxio is here is because he is a trader. And he bought first Bitcoin in 2013.
13, yeah.
At what rate did you buy the Bitcoin?
$200.
$200.
Yeah.
And sold it for?
Sold it for 300 and lost the funds because I got scammed by the exchange. Yeah, so it was one of the best and the worst trades in my life.
Okay, so it's for like a 50% trade and then again back to the 0%.
Yeah, exactly, just in a week.
Okay, Uxio is also an active trader. He has trained many people around from different countries as well.
Yeah, from different countries, mostly Spanish speakers, but yes.
I want you to teach audience the basics of trading also.
Okay.
Like, if anyone wants to get started into the trading side, of course, trading makes the most major money in the crypto space. So, like, what is the first piece of advice? Like, if anyone wants to start trading.
Okay. The first thing you need to understand is that trading profits from movements of price. You buy low, you sell high, or you sell high, you buy low. Okay, this means that you have to understand how price moves.
Exactly.
And to do that, in order to do that, you need to understand where there is a higher probability of price moving quickly, or price stopping, or price reversing. Okay, and to do that you need historical chart. So you cannot trade no matter what based on news and based on very short-lived charts.
Okay,
that's my very first and most important advice. Don't tell because your don't invest or trade because your neighbor says about this project or whatever, or because it looks fancy, or because on social networks there is some buzz and blah blah blah. That's nonsense. Actually, what moves price is buying power or selling power, which is clearly visible on the chart.
Okay.
You don't need 7 screens, real-time feeds, very costly or whatever, because actually everyone sells in the same spots and buys in the same spots, and after a few years, living within the charts, you can see those spots easily, but you cannot be also blindfolded and trade based on nothing. On I think this will go into blah blah blah, or I think this looks like if it were to reverse now. That's nonsense. But despite being nonsense, lots of people trade like that. And of
Yeah,
course,
and they call it their gut feeling.
yeah, the gut feeling, yeah, the gut losing feeling. Yeah, yeah.
And if the trade is a winning trade, they'll say in India, तेरे
Uh-huh.
भाई ने तो कहा था. That means like I told you.
Okay. Yeah.
Okay, like if anyone is entering the trading aspect, you
Yeah.
gave a very good piece of advice. Do not trade the news,
Yeah.
because we also interviewed a crypto journalist,
Mhm.
I guess 2 episodes before in this season 2 only, and he also mentioned the same thing because he's a journalist, and he said the level of fake news that is circulating in the market, you cannot even differentiate what is a fake news, what is an actual news.
Yeah. Actually, I would like to add to that concept. Okay, the news is something that someone writes
Mm-hmm.
after something has happened.
Right.
Okay, but that's not how the market works. I'll tell you how the market works. Okay, there is some buying, some selling, the price moving, whatever. And then,
You know, I'm actually liking it. Your hand,
okay.
it's got like a magic.
And then something important is going to happen that will bring lots of money to this particular market, whatever
Mhm.
it is. So, for any reason, you know it.
Right.
You are the first person who knows it because you are the one who is making that move to happen for any reason. Let's say, a new discovery or whatever. So you are the first one that is investing, putting money into that stock, that crypto, that commodity, whatever, because you know it's going to go up in value.
Right.
And you want your loved ones to benefit too. So you tell them, okay? If you have some clients or whatever, that money will pour in the market very silently for as long as possible. Experienced traders can see that, can see what's called accumulation and distribution, which is it's money, or money preparing for an uprise, for longs, or preparing for shorts in a silent matter, so the price doesn't get changed really much, but the underlines are changing significantly. And if you are an experienced trader, you can easily spot that. Of course, non-informed people will do the opposite. Will buy when the price is doing like this,
Right.
or sell when the price will. Okay. So when there is a new, the movement has already happened, has already burst. The non-informed people, what I used to call them little fish, all go in and promote that initial burst into a long uptrend. And then the new arrives. Okay, the price went up because of this and that and Warren Buffett and whatever.
Right.
But this is always like trading looking to the rear views, like looking at the rear views. It makes no sense. You are going after the information that may be right or wrong about an event that is, of course, old, because you should be positioned way before that initial burst. Either the burst is upwards or downwards, it doesn't matter. Do you know what I mean?
Yeah.
That trading on news is doing the thing completely wrong, completely like the opposite.
Even you are telling me this whole perspective, in my back of the mind, there's a personal experience of mine during the 21-22, when the bull cycle was at the peak.
Yeah.
One of my old friends called me,
Yes.
and he told me like how to invest in Dogecoin.
Okay.
Like a completely new guy who doesn't know anything about cryptos, but he wanted to invest into Dogecoin.
Yes.
So what I did, I actually shorted Dogecoin.
Oh, really?
Yeah.
Oh, that's risky, but it's a good move.
Yeah, and eventually the trade was successful because I guess Doge was around 50 rupees. I don't know how much is that in dollars at that time of value, but I shorted Doge around 50 rupees, and the highest was like 5 or 10%, maybe more than that.
Uh-huh.
And it eventually fall like 70-80% after that.
I see.
Although I didn't capture the whole move, but yeah, I shorted the market, got a decent gain, and that's all.
Yeah.
And those people who were actually investing into the Dogecoin were actually because of the news. All the major news publishing media articles were talking about Dogecoin, how Elon Musk was promoting Dogecoin. So it's exactly like what you mentioned at the beginning. Like the news is written after the event has happened.
Exactly. And that's when the disinformed people most flock into the already dying trend. Maybe
Yeah.
there is a last burst that can be a 30% more, but we will last, the last 5% of the trend and the trend time. I mean, and it will be.
And
Yes.
all the experienced traders, all the smart money is dumping on those
Yeah,
retailers and the
exactly,
newbies.
exactly. Actually, sometimes the big investors hire
Mhm.
hire the newspapers and the news and the media and whatever to publish bullish or bearish in the other case, but bullish news to let them allocate all his positions into the non-informed people, the last non-informed people. But because this behavior is, you are buying to a person who comes in that has even less information or less knowledge than you. You are
Right.
looking for a silly, it makes no sense. But this is how it works all the time, in all time frames, in all products, in all.
So what are your favorite technical indicators that you use personally?
Okay, okay, that's a good question. My favorite technical indicators are no indicators because I am a price action guy.
Mm-hmm.
Okay. Apart from that, I like very much a little oscillator, can be RSI,
RSI.
RSI, Relative Strength Index, Force Index, which is an oscillator that doesn't saturate, a simple stochastic, even a MACD can fit because I'm a lot into divergences,
Mm-hmm.
right? So it's not the same a double top or a double bottom, but when I have a double top on a relevant support or resistance with a divergence in one of these simple indicators, I'm I'm very eager to see how it develops.
Actually, I believe people are very naive actually. What I have seen, they, get to a random YouTube video.
Mhm.
Like you mentioned, all the indicators that are the very basics, they
Yeah.
do not understand that and they directly go to the indicators like super trend.
Ah, yeah, yeah,
Yeah.
yeah, 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 yeah,
So
yeah.
these type of indicators these people use, and every random influencer will be taking like you apply these settings, you apply these settings, and now you get the winning trade.
Ah,
But actual, the support resistance, the RSI, the MACD indicator, the all the indicators you mentioned are
yeah,
the
and a
most
simple mover, yeah,
basic,
simple
even the
mover.
most powerful ones.
Yeah, because you know, again, what makes the money is to buy over buying orders,
Hmm.
little over buying orders, and sell under lots of selling pressure,
Right.
and that makes the money, and that is not in the indicators. Okay, price oscillates and has like a changing personality.
Hmm.
But over time, it's not like this that it changes personality. Maybe it can change volatility like this,
Hmm.
but after compression, after congestion, and it's predictable. And and every price has its own character, which
Right.
is changing over time, but slowly. So it's not as important to use, I don't know, Williams R or stochastics or whatever other is oscillator than to fine tune the indicator to the current or recent behavior of the price. Say for example, you have a simple moving average or
Okay.
I say simple, but it can be an exponential
Exponential,
or
right.
weighted or whatever.
Hmm.
Okay, if you set it like, okay, I like the SMA 14,
Hmm.
that makes nonsense. Maybe it's okay for that particular chart at that particular moment in that particular time frame, and because it shows where value usually is. So when there are swings, upward swings, the minimums
Hmm.
are matching the moving average. That means that you have properly adjusted that moving average to show you more or less where the value, not the price, the value is moving. Okay. So if you have adjusted that moving average, you can expect that on the near future, not on the future, okay, the faraway future, on the near future, it will tell you approximately where the value is still moving. So you can make your swings and you can go with the trend or against the trend, and you can estimate how long can you stretch, your risk. But you have to adjust them, and if you don't, it's pointless. So you don't need fancy indicators. You need to understand what you are doing. For example, Force Index, one of my favorite oscillators, which does not saturate, but it's very good showing divergences, especially upwards divergences. It's just a simple multiplication, price times volume on two different candles, and it gives you a lot of information. It's just like electrocardiogram. I mean, a very simple chart, very simple drawing can give you lots of insights, but you have to understand deeply what you are doing. So yeah, you don't need fancy indicators, you don't need much. I use a lot indicators for explaining to people how price usually behaves. For example, Kellner channels. Those are channels, simple channels, not like Bollinger bands. The Kellner channels don't spread or move with volatility. So they tell you how predictable the swing is. They tell you how big the swing can be if you have adjusted them properly and the price character doesn't change suddenly. Okay, and I use them to show the people what's the extreme of the swings, going upwards or downwards. The moving average or a couple of moving averages crossing themselves, which determine what's called the value zone, the value area, show you where the swing will start if you are going with the trend. But that's just for understanding how price moves. When you are trading, you don't need that. You only need relevant support, relevant resistance, which is basically the same. If that level is over the price, it's called resistance. If it's under the price, it's called support. And you have to go up one time frame to see it clearly. Okay, it's relevant because I can see it on the weekly, for example. Now I'm trading on the daily. You need just two lines because you are going to buy cheap and to sell expensive, and you just need that range, and it's way more important to make money to know that you have this much to win versus this little to lose. And if you do that one time after time after time, once and again, you'll, no matter what, you'll finish and you'll finish or you'll end earning money, and you don't need how do you say, a percentage of wins huge. You can be around 50%, but if you win this much and you lose this much 1, 2, 3, 4, 5, 10, 20, 40 times, you'll end up earning money.
Exactly.
Yeah.
And that is a simple match that a lot of traders, a lot of newbies do not calculate.
No, and it's the bare minimum. It's not so complicated. I mean, it's simple, but it's not easy because there is so much information. I don't want to tell that there is this information, but too much irrelevant information around so many videos and and pieces of advice or technical knowledge about brokers and products and technical indicators and strategies. But in the end, you are forgetting about the only thing that will make you money, that is buy a price that is unlikely to still to continue following, and to sell a price that is unlikely to continue rising.
Okay.
And you don't need technical indications, fancy techniques or tools or tips or advice or advantages to do that. You don't need anything. You just need a quite big historical chart, and that's it.
And even at the beginning of the podcast, you mentioned like you do not need 6 or 7 screens also.
No, at all. I don't think you can't be a productive trader trading from your cell phone. Okay, I think the mobile is a little too not enough. But a simple laptop can make you wonders. And if you have a dual screen, 24 inch is enough. Dual screen is more than you need to be very comfortable and to do all your trading fluently.
Now it is the time for the quick coffee break, and in this coffee break, let me introduce to our title sponsor, Hive. Hive is a layer 2 blockchain which is completely decentralized. There is no gas fees, and your addresses is as simple as your social media handles. Make sure to drop your Hive addresses in the comments for an amazing airdrop. And I believe like social media has created a different perspective for traders, like having very multiple screens, big putting big orders, making a like the winning percentage that the online social media is presenting us is like 99% of your trades are winning trades, maybe more than 90%, but it's actually not true. And losses are a part of journey.
Oh, of course. I can tell you my numbers, right? When I on the unbelievably good mood, and I feel I'm nailing it, everything. When I look at the real numbers, my feeling is 100%. I'm winning everything. But when I look at the real numbers, not the last 5 trades, not the last 12 trades, the last 40 trades, I see a 2 wins of 3 trades, a 66, 67, 68 maximum winning rate, not more than that. And when I feel miserable, that I'm failing just everything, when I look at the numbers, I see 1 winning trade per 3. 35%, 34% are my real numbers when I feel completely doomed. But it doesn't matter, because when I win 2.3 to 2.9 times
that much
what I
versus
lose.
less.
Yes.
Yeah.
I aim for a win-loss ratio of around 3. It depends on the trade. I can be okay with a 2.1, 2.2, but that's the very minimum I accept. Sometimes you get a 9 or something like that, but that's very, very rare. And with that in mind, even if you win only 1 of 3, you're okay. It doesn't matter.
You're back to square one.
Yeah. So it doesn't matter. You don't lose money. And again, it's not that you get a fantastic trade that makes your year. Absolutely not. When I make my fantastic trade of the year, my account does like this. And when my terrible trade of the year that I press the opposite button that I did want to press or whatever, my account does like this, because my account is the sum of many, many trades, not thousands, because I'm not a intraday trader. I'm not a day trader. I'm a swing trader. I make a few trades per week. But okay, you end the year with 150 trades easily.
What time frame do you prefer while trading?
I prefer weeklies and dailies.
Okay.
Yeah. For commodities, for example, I use weeklies. Bonds, commodities, and currencies, long-term trends to the intermarket is called, because they correlate in different phases, and you can have like sure bets. Not so much, but when the currency is up, the commodity is down, blah, blah, blah. Okay. On those, I go directly to weeklies to monthlies, but on single stocks or crypto, I check on crypto, or I check on weeklies, look at the relevant levels, and then I trade on daily. And very rarely
Okay.
I trade intraday. I used to trade forex, euro USD, euro dollar, and I trade also crude oil intraday, and some Bund. Bund is the German bond, the 10-year bond. I used to do that intraday, but not anymore because it's very time consuming and you have to wait for the grass to grow to get the perfect setup. So I prefer to use a very wide range of possibilities, the Spanish, Italian, French, and German, and both biggest markets on stocks. That gives me around 12,000 possibilities at the same time to look for all the crypto. But I don't trade a lot on crypto now because the big ones are just a few, and I need liquidity to don't fall on big gaps or whatever. So I'm something like a slow, busy trader. The time I trade, I'm busy screening, searching for the good setups, filtering, making decisions, making calculations, position size, risk and rewards, So I'm very active. The hour and a half I do trade once or twice a week, not more. And the other time I forget. And every day that I'm not trade, I just check, and it's 5 minutes, 10 minutes. If I have to move a stop loss or something, I move it. But my trading is completely inactive. On the opposite, when I was day trading, I spent lots of hours in front of the screens, but I was just waiting. I did nothing.
So you stick to your goals.
Oh yeah, of course. I learned that lots of years ago.
And you also,
if you don't stick to your rules, the problem is that you are deceiving yourself. You are sending to yourself a message that you are someone who cannot be trusted. And that's the worst you can do to yourself. Because if you are a cheater to yourself, you won't be able to stick when the times are hard. So, number one thing to achieve with every trade is to gain confidence in yourself. I did what I've planned. I'm the general I'm planning, now I'm executing, I'm the soldier. Very easy. Not very easy, very simple. Okay. Second thing, maybe I win, maybe I lose. But for sure, I will learn from this trade. So I document everything. Screenshot, trading plan, which is not complex. Trading plan is just a couple numbers or, okay, on this level, if I see resistance, I'll sell. I'll sell 1/3, I'll sell 1/2. That is written beforehand, before entering the trade. And the third thing, if you're lucky, you win money with that trade. And if not, it doesn't matter because you have a 3-to-1 win-loss ratio. So it will get solved on its own after the number of trades required, to take the luck out of the system and just get the alpha.
You also mentioned the very importance of documenting the trades.
Yeah.
So is there any specific procedure that you follow, like the buy price, the selling price, or the selling price, the buy price? There is any specific procedure that you follow?
Yeah, I got a crappy Excel sheet. I developed in 2009.
Okay.
That's the, let me say it in English, the trades registration. And I get the basic numbers. Price I want to enter, price I managed to enter, price I wanted to sell, price I managed to sell or get out, and the commission. So I can see the slippages and the commissions, and sometimes you see, oh, I must change the broker, or I must avoid this type of situation, or whatever. That's just for the numbers. Even it gets useful for the taxes. But the most important thing is the trading diary, which is a couple of screenshots, maybe the upper time frame. For example, in my case, mostly the weeklies. Screenshot of the weeklies with some comments on it. Very little, entry, target, stop loss, like colored segments, and maybe, okay, in this intermediate resistance, I'll look and I'll sell one half of the position if I see this behavior of the price, and that's it. And when the trade develops, and maybe I have to adjust the stop loss and to take it near the price again, then maybe I make another screenshot, and on the end, when I close the position because the stop loss was hit, or I hit the target or whatever, I make another screenshot. But it's just a click of, I've got a button on the keyboard, so it's like this, and it's 1 second, and I got number the trades. Trade number 2668, and I've got a folder number 2668, and I drag there the screenshots, and it's 2 minutes, and it's so useful when you once a year or twice a year. I used to do it way more frequently years ago, but now I do it once a year or so. You review all your trades, and you can see your patterns very easily. How can I be so blind or so dumb, or what happened to me to enter this crappy trade? And you can see it very easily, and you see your patterns. Oh, I'm entering too much against upward trends, which are extremely risky. Well, on downward trends, if you go against the trend, that's my favorite situation, because it's very typical that those situations get easily flagged. You have time to enter, you have lots of upwards potential, which develops really fast, so you risk your money very few candles, very few days or minutes or whatever, and the entry is very clear usually. But when you do the opposite, when you go against upward trends, upward trends are like this, downward trends are like this, so the bounce against the trend upwards is like this, very profitable, but the bounce against the upward trend is like this, and it's crappy, and there is a lot of volatility on the top, so you have to put the stop loss very, very far away from your entry point. So you see those patterns when you review your trading diary. Okay, I'm entering too many positions, short positions against the upward trend. I should not be doing this, and you adapt, and you improve your numbers significantly when you do that.
And there's a mandatory game in Coffee with Krypto. I'm gonna take you to the game.
Okay.
Have you ever played Would You Rather?
With
Would You Rather? It's the name of the game.
Okay. I think it's available, but I don't know how is it.
Okay, so I have the phone and I have the game ready with me.
Okay.
Now I'll explain the game to you.
I'm scared, right?
So I'll tell you about the game. The game is very simple. There will be a total of 3 questions. Each question would carry 2 options for you.
Yeah.
You have to select either one of them, and you have to give the reason why you are selecting it.
Okay.
Okay?
Yes.
So the first question, would you rather be able to predict the exact price of Bitcoin for the next 24 hours, or be able to predict the next big altcoin winner?
I rather predict the exact price of Bitcoin.
Yeah. Oh, that's nice.
Yeah.
So the second question is your wife or Bitcoin?
Bitcoin.
Bitcoin.
I'm a Bitcoin guy, 100%.
So we are not going to showcase this podcast to your wife, right? Okay, the last question. Would you rather have a $10,000 budget to trade but limited to only trading Bitcoin, or have $1,000 budget but you can trade any crypto?
No, I'm happy with trading only Bitcoin. Yeah, I have plenty of time, right?
Okay, so you are like a pro Bitcoin. What is the term Bitcoin maxi? If I'm not wrong. Bitcoin maxi, the people who are supporting Bitcoins only.
Yeah, maybe I'm somewhat Bitcoin maxi, yes. Maximalist.
Okay.
Yes.
So my last question for today's podcast, like you mentioned so much about the support and the resistance, but I believe there are 2 types of support and resistance. One you can call the static one, that the support is here, the resistance is here, and second the dynamic one that you mentioned, the moving averages.
Yeah, but I don't think, well, okay. Yeah, please.
Yeah. So my question is like, if a trader is entering into the market, he has two options: either use the moving averages, either use this support and this resistance. So which one he should prefer, or which one he should not prefer, and why is the reason?
Okay. That's a very important thing. I don't believe on dynamic supports.
Okay.
Because support is where the price is supposed to stop falling and maybe to reverse and start rising, right?
Okay.
Why does that happen? Because there is money waiting, there is an order. And you don't change the order every 5 minutes.
Right.
Though the price, the time goes by, the order is supposed to be updated every single second to match the moving average or the how do you say, the trend line, That's like a self-accomplished prophecy, or I don't know the term, but everyone can see this, so everyone expects the price to bounce on the moving average, and that's okay, but the real money is waiting you at 41.76, and that is not going to change. So you only need to set horizontal lines, always horizontal lines, and always two. If you put many lines, you are messing things up. You only need the relevant ones.
It should be simple.
Yeah, don't look for lines, that diagonal lines or whatever, but because it's just drawings in your mind. Say, for example, linear scale or logarithmic scale. If you put a line in linear scale and you change to logarithmic scale, you find now it's cutting the price. And if you put a channel like this in linear scale, and when you swap to logarithmic scale, you see that it's like this, and it makes no sense.
Exactly.
So it cannot be dependent of what configuration or set of your chart you have. It has to be eternal. And eternal is just an horizontal. Today, you are buying at 30, and tomorrow, and the next week, and if the price has not reached 30, wait till it reaches 30, but don't chase it with some fancy drawings, because that's all on your head. It's not on the market.
Okay, so that is a very important piece of advice for anyone who is like want to draw the support and resistance.
Yes.
And of course, this dynamic keeps on changing every second, like depending upon your time frame, right?
Yes.
Okay. Yeah. Thank you so much, Uxío, for your insights at Coffee with Krypto.
Thank you,
and I'm very sure the audience has grabbed some very important tips if they want to start their trading journey.
Okay, thank you very much. It was so much fun.
Thank you so much, Uxío.
Thank you.